All right, we are what are we now? 28th, Monday the 28th of November, and time is flying. So, Miss Sheehy Kelly, what's up? How are you?
I'm doing great. Can't believe it's almost Christmas. It's scaring me, but delighted to be
What
back
did
here
you
anyway.
what did you get me for Christmas?
Oh, it's a surprise. Can't tell you yet.
All right. So we're here to talk about the importance of two things. And really, this is everything for me as a trader. Like it's everything. Obviously risk is underlines everything I think we do. It's like it's got to be the foundation from which we build ourselves as trader, understanding risk. What's the size of my book? How much percentage can I lose per day, per week? What are my targets, as well as what are my downside targets? That's risk, and that's like a foundation, right, for me as a trader, that I then walk on that foundation every day that I'm sitting trading. But having good risk does not make you money. What makes you money is having, from my point of view, and this is where it's going to be an interesting conversation, is what makes you money is knowing what to do and when to do it, and then doing it, right? So like, knowing what to do. How do I know what to do as a trader to make money? I have an edge, right? I buy low of value, I sell the high of value, I buy high of value looking for a value to get higher. Or the inverse, I sell something that's cheap because I think it's going to get way cheaper. That's one of my core edges: imbalances, like something expensive getting way more expensive, or is cheap getting way more cheap. That's edge to me. And I have precise price levels, as do team traders, to trade against when I'm trading that edge. And then there's two or three more components that go into that edge. And that's my edge. So that's knowing what to do, right? And then when to do it, right? What timing is everything. Market's going up today. Great. No gold medals for anybody. The markets well, actually, today specifically, I think the markets are going to go down. Right. No one's going to win a prize for saying that or knowing that, right? Or thinking they know that, right? Right. Okay. Well, what's the trade? Right. Now we're starting to get somewhere. When to do it, right? When to do it. Well, what's the trade? Well, when oil gets to 77 today, I will sell it. Okay. That's my knowing what to do, when to do it. So we're just going to sit on my hands until oil gets to 77. What do? Come in this morning, I go bottom fishing at 74s, tight wrist, 10 tick stop, I get stopped out. Why do I do that? When all I want to be is seller on 77s, is because I've got really bad psychology. It's Monday morning. I'm still a little bit under the weather, as you probably hear. And I'm maybe a little bit hungover. So my psychology is not good. So why do we not do what we are knowing what to do? Over to you.
So definitely, and that's in terms of that changing every day. So we know that you have good psychology, it's something that you work on, but it's kind of important to understand that is, you don't just reach a constant level of skill in the psychology side. You have to keep working on it. It's something that you train for. And so like that, it can fluctuate. So if you're a bit hungover or you haven't had sleep, you're under the weather, you want to kind of check in place, that you check in with yourself, and then maybe you don't trade that day if you're under a certain number. So let's say that you give yourselves rating out of 10 for your physical state, your emotional state, your mental state. And then if the combined average of those is, let's say, less than 5, then you don't trade. So what I'm saying here is, we can talk about all of the different things that can help you to do what you want to do from a broader perspective. But then in the actual application of that, it's something you have to work on constantly. It's like the way you train your muscles in the gym. You want to be constantly working on your mindset and training it, and recognizing that there's days where you will fluctuate even if your psychology skill is high. I mean, that's an interesting question, actually. I'd like to understand from your perspective. Do you feel like you have good psychology generally, good kind of trading mental edge, and then it fluctuates, or how do you feel about it at this point? Your mic's off there, sorry.
Sorry, I did that for a cough I had there. Yeah, I feel like generally I have good psychology. Yeah, I try. I think one of the dangerous things is getting married to concepts, which I'm pretty good at sidestepping that, you know, and I've learned that the hard way, I think. And you know, like we were talking about the last time, I kind of now know what that kind of looks and feels like. And it's kind of this sort of feeling you get. And then I'm like, hold on, I know where this goes, you know? And so I tried to sidestep that, but I think I do. And I think for me, one of the biggest things that, you know, I do veer away from, you know, the path. You know, I fall off the psychological wagon a lot more, you know, because people think, oh, well, traders with good psychology or high performance psychology, they're just like these robots and machines, and they never, you know, adopt too much risk or never make stupid trades or, but you know, the reality is we do. And it's just over a time period, you get to realize, well, hold on, this type of behavior is just going to vaporize my net P&L over maybe a month, you know? And so you kind of just learn to slow play it a bit more. But I think, you know, what we were talking about before we started recording here was that, you know, traders just don't really give a shit about trading psychology because they think all I need to do is know what the best edge in the world is, and then I just trade that. And I think that's something that you're gonna pay for that dearly. In the, like financially, you're gonna realize that that's not the way it goes in reality. You're gonna learn that lesson the hard way. And I think,
Yeah.
yeah, go ahead.
That's what I find in me working as a trading psychologist. Obviously, I'm biased and I, you know, think everybody should be working on this, but I really do feel like there's an argument for addressing this, you know, as part of your trading education early, not waiting until you're engaging in some behavior that's so detrimental to your P&L that you've lost so much that you're like, okay, now I have to do something about it, which is usually the point people are at when I start working with them. You know, they've had big losses or they're going on tilt so often that they just can't make any progress. And then they think I better work on the mental side. And what I really love to do is get across the message that working on it early is part of peak trading performance. And in a sports perspective, that's nearly easier to convey to people because especially if you're working with high performance sport, like these athletes know that the difference of a split second could be the difference between winning gold or silver, and they'll do anything that they can in order to get that. So the mindset is already, let me look at everything that I can control in order to get that tiny marginal gain on someone else or even on myself, like to push myself that tiny bit further. So while there's definitely parallel there with traders, you know, it's a lofty goal, they know it takes work. It's like the mindset piece doesn't seem as important until things are going wrong. And I would love to try and address that, but it's something that I struggle with. I don't know how to convey that, you know, to people in a way that they really buy into, because I can see the difference it can make. And I'd love if people were working on it before they hit big losses and, you know, they have to come back from them. But what's your perception of how people could kind of connect with that idea earlier in their trading career so that they can save themselves that loss of capital and emotional capital down the line?
Yeah, you know, it's not going to be a warm, fuzzy answer because, you know, when you look, I've been there at the very start of trading futures when really, you know, I had it so easy when I was trading equities, like in swing positions for, you know, probably like 10 years before I started trading futures. Like I had, you know, buying Apple, buying Google, all these, you know, all these things and just everything going my way. And, you know, I was running a tech company at the same time. And really, I wasn't getting any heat on any of my equities trades because I owned these things. They could go to zero and I just buy more, you know? So really, I didn't have any risk tolerance or full understanding of risk at the time. And then when I got into trading futures, that's when, you know, things become super real. Like you've got 1%, 3% a day risk, you know, or per trade. maybe you only do like 2 or 3 trades a week or a month, you know. And you know, and that's what I'm getting to, is that you don't ever come to Jesus, you know, as in, and I'm not a religious person at all, but it's that like expression of nothing holds you right against the fire, you know, like losses and like real cash losses. And unfortunately, I think, like I had something on Twitter there, and with a guy, he was talking about risk, and he was talking about no one cares about risk, and I was like, I totally agree. And there was one person on the thread being like, look, we you know, I'm gonna put a certain amount of risk in this trade, and I don't really care if it blows up. And you're kind of like, well, and we were asking the guy on this thread, we were like, well, how much of your account is that? And he's like, I don't know, it's like 20% of my account. And I was like, that, you know, if people, and this is a Paul Tudor's Joan quote, if people focused on how much money they could lose, as just as much, if not more, than they focused on the money that they could win, they would be a lot more successful. And that's a Paul Tudor's Joan quote, and Paul Tudor Jones, and yeah, like, he's a legend. But the thing is, no one cares about the risk until it blows their account up. You know, over like 5 trades, someone blows their account, and then their shift goes to, well, what did I do badly there? And the last thing they're going to come to in that little investigation of how I blew up my account is that they oversized and they didn't have downside limits that were tolerable for their general win rate, you know. And so they didn't understand risk management.
I would say that if we can find a way for people on all ends of that scale to recognize that this can add to your performance no matter where you are, you don't have to wait until you're in a position where you're losing loads of money and repeatedly engaging in behaviors that sabotage your trading to incorporate trading psychology. So, but I don't know how realistic that is, because maybe there's so much to learn in trading that people are, you know, getting used to the risk side of things. They're learning the technical side. They're trying to amalgamate all that information, and then adding in the psychology is an extra layer that maybe is difficult at the start. I don't know. So I'm interested to hear your thoughts on that.
Yeah, that is interesting. I think you're right. There is so much to learn with trading, especially at the start. You're like, it's just a fire hose of information, and there's like 20 books that you immediately think you have to read before you can even do anything. And then, you know, you've got like podcasts from everybody, and you've got like Mike Bellafiore, who's fantastic, and you know, he puts out a lot of good content. SMB put out a lot of good content, but that's in a very high performance space. So if you're going to be like trying to emulate how those guys trade, you have to be very high performance and comfortable. What I mean by that is, like, you have to be super comfortable with very fast markets and quite large risk, you know. And you got to be reading tape, for example, which is a very, very high, when it comes to trading, reading tape and the ladder is very, very high performance, very high performance. And we do a course on that here, and you know, the guys in our room know how to read tape and time and sales and read the ladder properly. But you got to be comfortable to then say, yeah, I've learned that, I know that, and I'm comfortable. There is no more learning to do, you know. And so when you're starting out, there's like such a distance between you being comfortable enough to say, yeah, I know about what an RSI indicator is. And it's only when you go like 2 years down the road, you go, yeah, RSI is bullshit. You know, I don't have a huge edge trading RSI. You know, it doesn't really, it's a nice temperature check, but you know, and so then there's these other concepts there where you're trying to build edge. You're like, well, maybe I have an edge in like MACD divergence or something, and you know, you build something up there and it works until it doesn't work, right? So there's all this technical stuff. And then psychology, someone goes, yeah, you know, you really got to work in your psychology. And you're like, man, I am so far behind on the homework of learning you know, what's a good moving average crossover strategy. And maybe I don't even want to use that as an edge to what's value edge, or what's volume profiling, or what's TPOing, or and you're like, psychology, my mind is so scattered to the wind. I don't even know if I have a quiet space in my head as a trader yet to even think about my psychology. So it goes in the back burner. But then, this is why I said it's really important we talk about edge if we talk about this, because, well, if you have an edge and you say, well, this is my edge, and I know what my edge is, and it's like 15 of the guys trade the same edge in the room, and we are so comfortable with how we see the markets move because this is our edge, and how the market moves in relation to our areas, that there is no more dissonance about, do I want to trade a MACD? Do I want to trade a moving average crossover? Do I want to trade just like patterns, harmonic patterns like wedges and triangles and trend breaks and support and resistance? There's no more second thinking about any of that for us when you have edge. And so then you get to this quieter space in your head where, like, I don't need to read a book on Fibonacci retracements and be a total legend at Fibonacci retracements. I know my edge, and I just know the type of trade I want to trade. And, then you get to a space of the trades coming up and setting up, and you don't take some of them. And then you're going, oh, why didn't I take that thing? Why didn't I take that trade? And now the trade, like, what do we have one on Eurostock short this morning? That's in my edge. And I know I didn't take it because I was too busy looking at the DAX and talking to the guys in the room. And that happens far too much. So I need to fix that. I need to fix my focus piece. But apart from that, now I'm starting to work on things that are more psychologically focused. My focus, my in the moment focus, alert. But then I've seen some horrendous examples happen when, like, some of my mentees didn't take a trade, and some of the guys have been trading for 5 years, really good traders, and one of the traders didn't take an edge trade when it set up, so he went chasing it, and he had a really, really scary day, and we had a chat, and it was all because he missed that first entry, and then he had this tumble psychology that lost him money and had him in a really compromised psychological state. So, like, to answer your question, yeah, I think there's a lot, but you have to get, once you get your edge, then you can talk about learning, opening up your psychology.
So there's a clear point in the learning process for you where psychology becomes relevant and becomes the thing to focus on. And that's after your, like, technical edge, if you want to call it that, is locked in. And then that's the ideal point to start working on it. Yeah.
I think so. So. Yeah. And that's why I think traders who are probably probably 18 in their first 18 months of trading, they've probably gone through a cycle of realization, the pit of despair, then come back, found that they found an edge you want to stick with, and then they're ready. Then once they get comfortable with that edge, then there's no more dissonance about, here's the type of trade I do take, here's the type of trade I don't take. There's no more dissonance there, and then they're comfortable at that level, and then they can go, okay, what's going on with my psychology? Why did I have 10 bagger winners in a row, and then I tripled my risk on the 11th trade and gave it all back?
Yeah. And I think that actually reflects
hot hand fallacy.
That reflects what I see in traders. And I think sometimes people don't maybe realize that there is a pattern. There's, people start out well, it seems to go well for them. Then everything starts falling apart. And it's nearly like this learning curve that every trader goes through. And it's really common. So I think, actually, just as I'm reflecting now on all of the traders I work with and when is the ideal point, that sort of 18-month time frame, although, some traders might get there quicker, but that does seem like about the point where that happens, what you're describing, where people have gone through the learning curve, they have settled on what they want to trade, their trading plan is clear, and then if they did work on their mental edge at that point, that is even sooner than what I'm talking about. So I started the conversation saying, like, I'm trying to get across that people should work on this earlier. But I think you're right. There's a point before which it would be confusing and you wouldn't know what's a psychology issue or a technical, just because you have to learn more on the technical side. So if people at that exact point that you're talking about started working on their psychology, that would be a significant improvement on where I see people starting to work on it. So like that seems to be a good balance, between going too far and starting on your psychology at the very start when you're trying to just learn the technical pieces, and then leaving it the other side of the spectrum, leaving it until you've blown up accounts and you're at your wit's end and you're thinking, I have to give up trading if I don't find a solution or find something to change this. Like, that's obviously, you can work on it at that point, but it's not optimal. You could have saved yourself a whole load of capital, both financial and emotional, if you started at this point. So a question to you then is, what's your understanding of the mental edge? If we're talking about technical edge, and when that's in place, you work on your mental edge. To you, what is your mental edge?
Self-preservation and P&L preservation and compounding. That's everything I aim to do from a psychological point of view, is to compound. And that's like a target, and when I deviate from that, when I take checkbacks on my P&L, and that kind of set me back. Like in April, I had one when the market turned. It's just, the Zoolander problem. We just have a problem turning with the markets generally, like on a big turn. But I don't fall into despair. Like that line from 12 Years a Slave. I will not fall into despair. It's not, and I say this to other traders as well. Maybe I'm good at giving advice, but not listening to my own. But I don't think it's I don't think like 1 or 5 bad trading results make me a bad trader. I believe I know what I'm doing, and I come back to that confidence in, I do know what I'm doing. I'm not going to be told otherwise. Because then my whole confidence piece gets shot. And then what happens is you get gun shy. And then you're like, I couldn't even hit the floor if I tried, and that's just a huge negative spiral that's not going to serve anyone any good. And so I believe that I can trade. I understand that I do know what I'm doing. And this is half the reason why I mentor traders, is because it's just every single day, I'm just concreting the same edge every day. If I can't explain my edge to someone, I don't understand my edge. And that's one of the upsides of mentoring. And what is my mental? I don't know. Well, that's not the question.
Just
the question is
what is mental edge? Like, to you, someone can work on their technical edge and that can look different for everybody, but it's the thing in itself. So I'm asking, like, I have my own interpretation of what the mental edge is, obviously, but I'm coming from a brain saturated in psychology, so I can be biased around that. So I'm interested to know what you define as the mental edge. So not necessarily yours, but just what is the mental edge?
The mental edge is having a technical edge and knowing how and when to trade it. And that's kind of the basic summary of it. And then in that, if I'm not able to compound the money that I'm making using that, then there's something going wrong with my management of the money and managing of the risk.
So it's that piece of being able to execute what you've planned and having, and like in my brain, that breaks down into a whole load of, more specific pieces. So you talked about resilience. Basically, you were talking about when things don't go well, that you don't lose the head, that you don't despair, you keep your confidence high. So to me, that's like resilience under pressure, which is a key part of it. Confidence is a part of it. Emotional control, being able to stay calm no matter what's happening or what your previous results are, being able to reset to neutral after every trade. So I think when you're describing the mental edge, we're talking about the same thing. And then I'm just breaking it down into all these specific parts that can be worked upon consciously, you can improve all these different things. And then they allow you, when you do that, they allow you to better execute the plan, which is on the technical edge side of things. So like they go hand in hand. And that's why it's not just about fixing when something is wrong. It's actually about like, how can I execute my trading plan perfectly on every trade, whether I win or lose. Sometimes that's out of your control, but what's in your control is actually executing the plan. So I would say to people that if you work on your mental edge broken down into all these different pieces, it helps you to better stick to your plan. And there'll be points where even if you're not deviating wildly, if you can stick to it to a T, that's going to improve your results. So you don't want to wait till you're only sticking to it once a week on your trading days, or you're never sticking to it to work on your psychology. That actually, like, you can work on it all the time so that you consistently execute on the plan. Does that make sense?
I think it's really easy to do. But easier said than done then for a lot of traders. But but the problem is that it's easy to do, but people don't do it. And why do they not do it? It's because the markets are very dynamic and there's a lot going on. There's volatility, there's headlines, there's a lot of noise, and there's a lot of perceived opportunity, right? Perceived opportunity. And people then start taking trades that are outside of the edge. The most common thing, especially with people trading oil, is market bips like 40 ticks and they click buy. Market moves up 40 ticks and they click buy, and then bang, they're stopped out. Like maybe if they have an OCO, that's putting their stop in automatically at 10 or 20 ticks below, right? The market spikes, bang, they buy, and then bang, they're out. That's the most common thing. It's like salmon to lures, the market, they're like, oh my God, something's happened. I don't know what's happened, but something's happening. And that's a trade that's outside of their edge, but they just want the action. People are junkies, man. They just want the action. And I think that's something that you really have to, as a trader, this is what no one wants to talk about, right? Is the addictive, am I a gambler? Do I have a gambling problem? What the fuck, what am I doing? I'm not a gambler. Anyone with a gambling problem will never say they have a gambling problem, will they?
Well, some people do. Let's be fair. But,
some people do. All right.
People work through it. But I'd say though that there's a difference between gambling as like an actual gambling addiction, and just the addictive traits of trading, or the addictive features of trading, which would be like when you're actually putting on a trade, you're getting that dopamine and adrenaline hit that rewards your brain. And it's in the same part of our brain that reinforces behavior, that drive, our motivation kind of center that drives our behavior. So every time you put on a trade, if you're getting a nice dopamine hit, then that in itself becomes the thing that's driving you. So without ever having a clinical level gambling addiction, it's fair to say there is an addictive feature of trading that, your brain, if you're kind of someone that is very driven by adrenaline and likes it, and you're seeking that dopamine hit, then that's something to watch. But I would say that that's for every trader. And you'll have people at the other end of the scale who are more kind of risk averse and don't want to put on trades, and that's their issue. But there are a lot of people that would fall into that category where their brain is being rewarded by trading, so that can lead to over trading. But it's not actually a level of, it's not that they have a gambling addiction. It's just there's the same way with social media. Like our brains are rewarded when we see likes and when we get those nice social reinforcement of what we're doing on social media. It's doing the same thing in the same part of our brain, and that's why it's designed that way. It's designed to be addictive. So I would say that is something to watch for people, and that's something again that you can work on in terms of working on your mental edge. You can address this part and reshape how you approach trading so that you're looking to trade boring, which is something that a phrase that you said to me, and I really liked it. I stuck with that. Trading should be boring.
Trading should be dead boring, and when I'm like, maybe I'm doing a stream in the European session, or I'm like, doing an open stream, and there's, like I used to stream when I was with a different firm, like I used to stream on Twitch for the firm, like just some charts, and I'd be aware that like I'm not streaming music with that or anything like that. So it's just like some charts, and maybe I'm not talking because maybe nothing's happening. And I'm kind of conscious that there's a whole lot of retail traders out there watching the stream, and they're like, this guy Tim is boring, man. These markets are shit. Like, what, I want some crypto. I want like 20% move that we're fading on Bitcoin or something like that. And I'm really consciously aware that people are sitting there going, this is boring. And I'm like, and all I want to say is, this is reality. This is reality, and people kind of don't care, because then they just go, oh no, I'm going to go over the other channel where there's that guy, and he's trading like Solano, and that thing's ripping around the place, and there's like loads of this news feed. He's got like, this, all this music going and da 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 da, and fine, but it is boring. Yeah,
I think
it is
people have to
boring.
decide for themselves, it, what do you want out of trading? Do you want wealth? If you want wealth, then it's boring trading, it's sticking to your plan, it's having days that go against you and getting up and resetting to neutral. And that's not shiny or exciting. But then if you want wealth, that's what you have to do. But if you want excitement and a hobby and, to feel buzzed up
Become a
every day,
professional gamer.
then it's, then you can do all those things. But you got to know that if you're making a choice to trade that way, you're not trading for wealth. So I think if people can get really clear on like, actually, what am I doing this for? It's the same with, I had a YouTube video there about wealth and success. So people, or I see that traders tend to combine those two things together, and they feel like their goal is to build wealth, but actually they're caring about what other traders think of them, and if they got a really nice trade, and can they post that on social media. And so like, you're actually trying
Are
to,
they really thinking about that?
yeah, like, not
And
so,
why are they doing that? No
well,
one gives a shit. No one gives a shit.
well, that's
I
the,
don't.
let me pull that back a bit. So that's
But
the extreme behavior.
I totally understand that that's what traders do. Yeah, I would totally believe it.
So that's the extreme end of it. But like in the middle, it's people basically deriving their self-worth or their sense of self-esteem from their trading results. So whether some of them really do care about what they're posting and how people view them, but for others, it's slightly more removed from such a public sphere, but they do care about being a good trader and making it as a trader and having the respect of the trading community. And so they feel if they have a losing day, it's a reflection on how good they are as a trader. And basically at a subconscious level, they're also feeling
Their
like
self-worth
their
as a
self-worth has
being.
taken a knock if they're not successful. And so that's what's, when I'm talking about success versus wealth, when you're caring, when you need that external validation from your trading results, then you're mixing success with wealth. Because if we were just looking at it from a wealth perspective, and if a losing trade was just a losing trade and it didn't say anything else about you, it would be very easy to just reset to neutral and then stick to your plan on the next trade. But it's when you start attaching all of these other meanings that are more in the kind of success and how you define success bracket, when you start mixing those things together and then your trading results are feeding both goals, that's where it gets a bit messy.
And I think that's very common. I think that's very common, that people just attach their trading results, and they don't understand that that's a psychological process they can break
Yeah.
and separate the two. But the reality is that traders just think they're going to be absolutely awesome in 3 months. If I had my way, I would have a trading college, and it's 4 years, and it's full time, 5 days a week, and we only get like maybe a month off throughout the year, and it's edge, and it's just getting mileage and mileage and mileage on the sim. And and if you hit certain targets, you can come out of that earlier process. But yeah, I mean, but otherwise people think, hey, I'll do this in 3 months. And we all know how that goes for everybody listening. A lot of people just get involved. 3 months later, they've blown their accounts, and then they start to maybe learn something, and they'll raise another stake, and they'll go at it again, maybe blow up again, because they're not developing their edge. But I mean, it's hilarious because I see this all the time with people. And I had one trader who he had like 25 grand in his account. And this is when I was working for another firm, and I was a sort of a senior mentor and trader. And he could have spent sort of one-to-one time with me for like 2 months. But instead he was like, nah, the price, it doesn't work for me. And I was like, well, it's my dedicated one-to-one time with you, man. So, I can't be doing that for free. I have to eat as well. And I'm not going to be trading when I'm doing that one-to-one time with you. And he called me, and he's like, he sent me a screenshot, because unfortunately he had my personal number. So he was on to me on WhatsApp, and it was like in the morning time during hours. And he sent me a screenshot, and he's like, I'm in this trade. What should I do? And I was like, you should cut out of that loss right now, man. And I was like, listen, it looks like the market's given up supports at this area, and it's going to come pull back to that support or now resistance area. And using this other thing we look at, it's going to then sell down. And so I said, you should really be off the market for the day now with that type of a loss, and maybe the week. Fast forward about 5 o'clock that evening, 4 o'clock that evening, and sends me another screenshot. And I'm like, man, don't even be texting me when you refuse to like respect my time before. Another screenshot came in, and he'd flipped the trade, and he'd blown his whole account on these 2 trades. And I was just like, man, I can't save you, because you've ignored my advice from earlier. And I mean, what do you expect me to do? What do you expect me to do? So people are happy to blow 5, 10, 15, 25, 50 grand in the markets punting around, but they wouldn't spend one dime in good, learning how to really trade with a good edge, and they wouldn't spend one dime working on their psychology. And that's just human nature, it seems like.
Yeah.
It's human
Until
nature.
The pain is so big that then you have to. But I guess what we're saying is that you can save yourself that amount of time, and that like you can put through months of trying to figure it out yourself if you
it's money. It's
mentoring.
Not time. It's money. It's money and time.
Money and time. Yeah.
And you know what the most expensive commodity in the world is? They don't make any more of it. And £1 billion won't buy you one bit more of it. Is time.
Yeah. Absolutely.
You have 10 billion quid. You can't buy 1 second of time back.
Yeah.
Not one.
And so if we were to wrap up everything we've discussed in terms of like kind of recommendations for people or key points that can help people, we'd be talking about, get your technical edge down first, like understand about risk, know exactly when you're supposed to be getting it, get all that in place first. Recognize that there is a learning curve, that you're going to have a learning curve in trading for about 18 months in and around of trying to piece all this together. And then right at that point where you know what you should be doing, that's when you start working on your mental edge, before you ever get to the point where you're doing what the person in that example did, where you're blowing up accounts, where you're, trading on tilt so often that it's just blowing a hole in your account. Like, start working on your mental edge as soon as your technical edge is in place, and then you can save yourself time
100%.
and emotional capital and financial capital, and trading should be boring. Final word on that, probably.
Trading should be boring. Yeah, absolutely. I totally second that. Yeah, I think we should continue this this chat maybe with something else next week. Something on self-awareness.
Yeah.
And I've got a couple of topics we should really jump into in the next one. It kind of dips into a little bit of your performance profiling, self-awareness piece. And I know traders on our team who've worked with you have like literally done 180s on their performance, and they're just like loving how they trade now from doing some of that work with you. And it's all that self-awareness piece.
I'm glad to hear that's holding. And that's, I think, my approach to trading psychology is very in-depth, but it's to provide sustainable results. So not like a quick hit where something's going wrong and then here's a band-aid solution and then it feels better for a couple of weeks and you go back. It's really to try and like give you the tools to take control of your own trading psychology. So I know, because the people that I've worked with on your course, some of them I worked with, you know, started working with a year ago, say. So it's nice to hear that that's all still in place for them and it's still going well. They're still benefiting.
Yeah. Yeah. Some incredible cases there. Yeah. Really good. All right. Any plans for the week? Christmas shopping for my prezi, no doubt.
It's actually my mother's 70th birthday. So we're
Wow.
celebrating that. So yeah.
Well, happy birthday to her.
Thanks a lot. I'll pass it on.
All right. Well, thanks a million for your time once again. And we'll check in next week and see how everyone's doing in Traderland and Psychology Land.
Thanks, Tim. Looking forward to it.
Take care.
See you.
Cheers. Bye-bye.